Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to all the trade day traders to the Bull versus Bear webinar on Monday, the 25th of August. Steve Miley here on the call for Trade Day. Welcome, everyone. We'll go through our usual regular run through, but with the slight twist that we have on a Monday, where we'll take a look at what I like to call the shape of the week, take a look at the slightly bigger picture outlook for the week, what we've had last week, what we've got coming up this week, to give us an idea of where the volatility points might come this week and how it might affect volatility today. So even though we're day trading at trade day, it's good to have an idea where if we've got more volatile events potentially coming, it could mean that the markets are less volatile beforehand, and then you may adjust your trading strategy slightly because the less volatility might mean you might trade bigger size or have tighter stops or wider stops or whatever it might be. So I think it's a good practice to work out what we've seen over the past week, what we've got coming up. We have our weekly reports that we publish. We have the macro matters if you're relatively new to trade day. In the section, if you're watching this live in the members area, in the section below where the webinars are, we have 3 columns of research. The left-hand column is the technical analysis. The middle column is the macro fundamental, where you'll find these 2 reports. The macro matters, this is the more in-depth, longer report, usually runs to 3, 4, 5 pages. Then we have our 1-page summary of that macro matters report. The left-hand column, you'll see the daily technical analysis reports that go up every day on indices, on oil and gold, on NASDAQ, S&P, and we'll look at those in a little bit later. They go up every day. And also on the bond markets, on the US Treasury bond markets, 30s, 10s, 5s, and 2-year bonds. And on the right-hand column, you have the news. So you have the news reports that are coming in from our partners at LiveSquawk, and you can also get the Squawk service from them. So we'll start off with the macro matters report. We'll look at the bigger reports. So US stock averages were going lower all week, being dragged down. Tech was just drifting lower throughout the week, really. No real news. But yields were going slightly higher, which is usually bad for tech. Higher yields are bad for growth stocks. Higher interest rates, higher yield means it lowers the long-term discounted value. And then so growth stocks such as tech stocks usually underperform if yields are going up. And yields have been creeping up slightly over the past week. And up until Friday, and then but the market is waiting on Jerome Powell's speech. So markets had drifted lower all week, and then we had Powell's speech, very much more dovish than the market was expecting, a potential indication that a cut could come sooner rather than later. And sort of Powell emphasized that labor market had showed signs of strain with both labor demand and supply showing. He warned that downside risk to employment could materialize quickly. So that was definitely more of a shift to a more dovish tone, more concern about the economy. And that saw a significant move with yields dropping 7 basis points at the 10-year. 10-year dropped 7 basis points to 426. And it saw us move into more what we like to call a risk-on environment. So that means stocks were up, oil was up, commodities were up. So and the dollar was lower. So we saw that as the outcome, an expectation of potential rate cuts coming from the Fed in September. So that's what we saw, and that actually ended up meaning that the Dow and the S&P were both up and closed at record highs. The small caps also did really well, but the NASDAQ lagged and actually was down on the week, still down on the week, although it did bounce firmly on Friday. So the NASDAQ slightly lagging behind there. So Powell indicating potential rate cuts. It says here the Fed Watch tool indicating 90% chance of a rate cut is currently at 85%. We'll come to that shortly. We also had strong, though, flash PMI data last week, so from the US. So that shows the actual core economy is still strong at its highest level this year. So that was a positive. The S&P Global Composite PMI for the US strongest for this year. So that was a positive as well, showing that the underlying Economy in the US is still relatively firm, although there are soft spots in the labour market that the Fed may be worried about. And on the geopolitical side, we had some early in the week, some talks between Zelensky and Trump, and also Trump, Zelensky, and the European government heads of government, and some kind of small progress made on that side. No real progress though since the Trump-Putin meeting a week ago, Friday. So no real progress with respect to including Russia, but there was some slight progress made, but it seems that nothing's really moving forward there. Critical going into this week is going to be Nvidia. Nvidia always reports very late in the earnings season. Earnings season is pretty much finished now. And obviously kicked off at the beginning of July, so we're like 7 weeks into earnings season. Nvidia always comes towards the end, or pretty much at the end, really. And that's out on Wednesday. So that's going to be critical to this week, I think, Nvidia on Wednesday. On the data front, it's it's actually a UK bank holiday in here today in the UK. And although the market is not, the UK market is not the be all and end all, kind of stuff, it is a large part of the global markets. So with the UK coast day, things might be a little quieter, and we didn't have any we don't have any significant US data out today. So market's very, very quiet today. We have hardly anything on the central bank side this week. We get Bank of Australia meeting minutes. So that's nothing really significant that's going to impact any of the markets you guys are all looking at. Key data this week is Thursday, Friday from the US, Thursday GDP, and then Thursday and Friday, but the more important data on Friday is the PCE. Remember the PCE data, the month-on-month and year-on-year PCE data for the US. That's the Fed's preferred measure of inflation. So that's going to be the critical piece of data. We also get tomorrow, Tuesday, US durable goods and consumer confidence. So we're going to be watching that. So that's the other piece of data of note. Nothing really today. US durable goods, consumer confidence tomorrow, and then then we'll get US GDP. But the real critical data is going to be that US PCE. And then in between that, as I say, Wednesday, we get the video after the bell, by the way. Remember, after the bell, after the close on Wednesday. So let's look at the calendar. You see the calendar day very, very light. UK holidays, as we said in here. We had German data, some strong German data in here. I'll just go and pull that. Where's the German data in here? Yeah, no. Where was that? I popped it out earlier on. Oh, here it is here. So we did get this German data this morning, this business expectations, business climate, the IFO data. It's been always much watched as a key piece of European data. Remember Germany, the powerhouse of Europe, and this is a business climate index, the IFO, and you can see in here, German business sentiment rise to the highest level in 1 year. So that's a positive for global markets that you see in here. Nothing really of significance. We get Fed member Williams speaking at 7:15 p.m. today Eastern time. So maybe watching that, but that's going to be in the after session, after today's main session. On the earnings side, as we said, nothing really of note today. PDD Holdings. Nvidia is the big one on Wednesday. So we're watching out for Nvidia on Wednesday. That's going to be all eyes on that. That's probably the key event of this week. Just so while we're doing the rounds of the calendars, we've looked at the macro calendar, the earnings calendar. Let's take a look at the Fed calendar. So the Fed next Fed meeting, the one we're getting all excited about for potentially a rate cut, is the 16th to 17th of September. So that's still, what's that? So we've got 3 weeks, still 3 weeks away. So still some time, still a lot to be seen before then. I'm just going to refresh this. I'm just looking for the morning meeting where, here it is. It wasn't out earlier on. So nothing really of note in here. Just looking at the headlines in here. So crude Dr. Pepper to buy JDE Peat. So nothing, big deal, but it's not going to impact the markets we're looking at. John McConnell called Chicago a mess. Fed Reserve's big annual meeting, Jackson Hole. That's a recap. We spoke about that already. Nothing really in there of any great note. Just running around the headlines. Stock rally stutters, not significantly. Markets not like falling apart, but really big update on Friday. Just stalling a little bit in here today. Fed Jackson Hole exposes hard road ahead for central bankers. Bond markets big power rally needs supportive data to march on. That's all going to be on the data. So that Friday inflation data is going to be important. Fed pivot bolsters world stocks. China shares at the highest since 2022. US stock futures dipped this morning after Powell-led rally back on Friday. And if we look in the global markets around this morning, so 0.4 up on the Nikkei. Hang Seng leapt 2%, nearly 2%. UK FTSE's up slightly, up a tenth. German DAX down. Oh, sorry, no, the UK FTSE's not up a tenth. That's wrong. Excuse me. That was from Friday because the UK is closed today. Ignore that. German DAX down 0.2. French CAC down 0.6 in here. And if we look on the overnights in here, we're slightly lower. About 0.3, just over 0.25% down on the S&P and nearly 0.4 on the Nasdaq this morning. Let's turn our attention to the interest rate markets. You can see in here for the September meeting now up at 85% for a rate cut. So that's a significant increase from where we were before. Going into October now, we've got pretty much, if we had these two together by October, we've got a 91%, 8.5% chance that we don't have a rate cut by October, and 41% chance that we've had 2 rate cuts. So we've had 25 and 25 by October. And by the end of the year, there's a 33%, 1 in 3 chance that we'll have a 3rd rate cut. So 1 in 3 chance we have a 3rd rate cut, and pretty much priced that we'll at least get 1 before the end of the year. Only a 1.6% chance that we don't get a rate cut by the end of the year. And only about a 17, 18% chance we don't have 2. So the market's pretty much pricing in 2 with 1 in 3 chance we get a 3rd rate cut this year is what the market's pricing in. As we said, yields move significantly lower. We've been eking up through from the middle of August, back down towards the lower end of this broader range we've been in for pretty much, we've been, apart from this spike, this was on just after the tariff announcement, but the market's pretty much been caught between like 410 and 460 for most of this year, 410 and 460 if you're looking here. It's only a little bit of a push up above here and a spike down there. So we've been 410, 460 and back towards, you'd say, the lower end of that range after Friday's move in here. And we were in here bearish, and with Friday's move, we switched to more bullish within that range on the futures. So 30 years, 10 years, 5 years and 2 years now, all switching to a bullish outlook. So it's bullish on price, lower yields. And stocks we were questioning with the drift lower that we've had on both S&P and NASDAQ in here throughout last week. We were questioning our bullish stance and we're just clinging to that. But obviously after Friday's strong rallies, we're back to bullish in here now with the S&P right. It's all-time high, and although dipping back from that this morning, but we're still carrying a bullish view into today. Right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and we will be back with you with another Bull versus Bear webinar tomorrow. Bye.